So are you confused about how to pay yourself as a single member LLC or a DBA? Then this video is for you. So let me just first start off with identifying the main reason that you have an LLC, which is to separate yourself from the business and to create asset protection. Caveat, and this post is not related to those people who are set up as an LLC but pay yourself and are taxed as an S corporation. That is for another video, and we'll go down that rabbit hole in the future. So most people are really scared about doing this and they never feel comfortable how they're paying themselves. But I will say, if you have any employees, then you really want to get yourself a payroll service. Now, we utilize Gusto Payroll for our payroll clients and we highly recommend it. Give us a call if you want to talk about that. But if you try to do payroll on your own, you're going to get in trouble. I 100% guarantee it. It is a finicky system, and to do it in a manual way will always get you in trouble, whether you calculate it wrong or you file it in the wrong time frame. Get yourself a payroll service, hands down. So again, as a single member LLC, you are what's called a disregarded entity. So what that means is you are taxed on Schedule C of your personal tax returns. You are not doing a separate business tax return per se. It's all going to be on your personal tax return. Number one, you want to always make sure that you've got separate bank accounts. So as you're going to be paying yourself, never run everything through the same bank account. So I see a lot of clients do this, and it's a big no-no. I'm going to say you're piercing the corporate veil by commingling your funds. And so always make sure you have a separate business and a separate personal bank account to run everything out of. In its simplest format, the only thing you're going to do to pay yourself as a single member LLC or a DBA is you're going to cut yourself a check for whatever dollar amount you want that to be. And that could be actually writing a check, that could be transferring money from your business checking account to your personal checking account, or it can be some kind of mechanism that moves money from point A to point B. The amount that you're going to pay yourself is going to be completely up to you. I highly recommend a couple different ways. I like to look at the net profit of the business at various points throughout the month to pay yourself the net income out of that business to your personal. I would also recommend looking into the book called Profit First, where it identifies a certain percentage of revenue that you pay yourself out of each paycheck that you receive from your clients. Whatever it is, just decide on a regular amount that you pay yourself so you don't get into the habit of driving your paycheck up when times are good and driving your paycheck down when times are bad. Create some consistency for yourself, because at the end of the day, you want to make a living on this salary that you're pulling out. So I highly recommend making it as consistent as possible so as you don't mess up your personal budget. The accounting for this, my last piece, my bread and butter, what I care about the most, the accounting piece for this is going to be the following. You're going to decrease your cash and you're going to increase your distributions. So the distributions account is going to be an equity account on your balance sheet. A lot of clients that I talk to, they get into this habit where they are recording their paycheck as an expense, and that shows up on your profit and loss. That's incorrect. Your paycheck as a self-employed DBA or single member LLC is not an expense to the business. It's a distribution of money. And so it's going to be recorded on the balance sheet as an equity distribution. So don't fall into that trap. So summarizing everything up, you want to pay yourself a consistent amount out of your business checking account, move it to your personal checking account. The amount is going to be consistent with your net income or a percentage of total revenue or some combination of the two. In the next couple videos, I'll be transitioning and talking a lot about paying yourself as an S corporation, a single member S corporation owner, and how the tax ramifications of making that change could be advantageous to you. So more to come on that. Stay tuned. So if you like this video, please consider subscribing, hitting the bell at the bottom so you can get the latest and greatest Universal Bookkeeper tips and tricks that are coming out on a regular basis.